Let's get to Oracle's numbers, which have just crossed. Josh Lipton has them for us. Josh.
Oracle's reporting Q1 results here. EPS of $1.03. That's versus expectations of 97 cents. So a beat there. Top line comes in at $9.73 billion. The street was closer to $9.77 billion. If you look at their two big segments, cloud services and license support, $7.37 billion. The street was closer to $7.41 billion. And then cloud license and on-premise license, $813 million in the quarter versus estimates of about $860 million. Call starts at 5 p.m. Eastern, at which time, of course, we'd expect guidance. Back to you all.
Thanks so much for that, Josh. A little bit of a surprise to see it move down like 3.5%, a decent beat on the bottom line, at least. I guess we await guidance on the call. And yes, it's up sharp year to date, but it's plateaued for 2 or 3 months.
Yeah, I would say that a little surprising, too. And now keep an eye on it because we don't know if the first trade's the real one that's going to last either. But, a top line miss is probably an issue in a quarter when top line has been blowing out estimates for the most part, if you go across the whole S&P 500. So, yeah, I do think that's fair to note. Also, the 97-cent forecast that was beaten by 6 cents, that had actually trended just down a few cents over the last couple of months. So, in other words, that wasn't seen as an aggressive hurdle. And so the 103 versus 97 maybe doesn't come off as being particularly impressive on that front.
The outlooks, Lindsay, from some of these companies, I'm not referencing Oracle specifically, but in general, this quarter have been a little more cautious than they were the quarter before, given what we've seen with Delta and some of the uncertainty. Where are you seeing 2022 earnings tracking at the moment versus the market expectations?
Yeah, 2022 earnings is still looking good at double digits. I think, sure, management teams are starting to get a little bit more cautious. They always tend to be more cautious when there's an uncertainty like this. And remember, there's not a lot of companies that have come back in full force to reinstate guidance. So analysts, Wall Street analysts, are still flying kind of blind when it comes to the outlook and into the future. I would say the one thing, just turning to the Oracle, I know we're going to get guidance from them on the conference call, but I think really why the stock might be trading down, at least initially here, is probably on that sales miss, because their future is all about growing top line. In fact, they're foregoing margin expansion in return for this top line growth. So I think it's that. I also think cloud services and license support, that's supposed to be the key linchpin for that top line growth, and for that to come in short, I think that is probably negatively impacting the stock, at least right at this moment. But for overall the S&P 500, expectations continue to move higher. We'll see if that continues into 2022. This has been kind of an anomaly this year, with numbers going up throughout the course of the year.
Lindsay, pivoting away from Oracle itself, broader markets once again. I mean, clearly, as we've been saying, the headline indices have kind of moved sideways for a little while now. Do you feel, speaking to your clients, that there's been a lot of churn underneath the top line for the indices in terms of sector selection?
Yeah, I mean, if you look underneath, there's been a lot of different corrections going on in different industries, even individual stocks. So you look at the biotech, you look at the airlines, you look at Tesla at all different points, even tech in the middle of the year pulling back, financials currently being a little more weak. There's always some sector or industry that has pulled back into either a correction or near bear market territory, while others have taken the reins and led us higher. So right now, technology has been a key leader there. Consumer discretionary staples kind of on the backside of that, moving lower. So I think that churn that you're seeing that's happened throughout the course of the year has really reiterated the need for a barbell approach to investing. You have to have a little bit of everything. You have to be diversified, especially if you're a long-term investor. And so that's what's been able to drive this market continually higher. And by the way, as earnings have also moved higher, we've seen the PE on the S&P 500 come down. So we're down to under 22 times now. We haven't been there in quite a while. So it's something that we're keeping an eye on. We want to see the market internals that I know Mike goes through every day on your show start to improve and flash more positively. Also, consumer sentiment being negative as it is right now, or at least moving lower, has been almost a contrary indicator for the market too, at least as we look at this current moment we're sitting in.